Is
So
it?
when do you guys celebrate it?
I don't know. We celebrate the kind of like the Monday that we don't work, pretty much. That's
Yeah.
which is next Monday, you know. But it's no particular celebration. It's just like May. It's called just a May bank holiday. So we have a early May bank holiday and late May bank holiday. So anyway, okay, Friday the 29th of May. Welcome everyone to another episode of the Crypto Hour. So there's quite a few things to talk about today, mainly news related. But let's start straight away from the elephant in the room. Okay, share my screen. So there's been a little bit of another bloodbath this week, as we're getting used to. So the not only the prices of Bitcoin have declined again from where we were last week. Last week we were about 77 and a half, 78, and now we're down to about 73. We touched 72 yesterday. We'll see where we end up today, but it is
I know that
um,
they can use those.
we are kind of like a fairly lower than we were last week. Now, there are several reasons why that is happening, and although some of those are bad, there are also some good aspects to take from this. So let's start one thing at a time. First of all, the still the ongoing Iran US conflict. And whenever there's some kind of development, and you must have read in the news that there were like a couple of planes that were down by the Iran artillery. It has an effect on risk, the risk perceived with certain investments. On top of that, we had inflation numbers this week, which is the we will see in a second. Um, so we had the PCE price index on Thursday, yesterday, which I'll show you in another place. Actually, this doesn't show you the yearly figures. So the PCE price index is it's the measure of inflation that's used by the Fed. Okay, so it's now at 3.8%. Okay, so that is important because obviously it determines then, what the Fed does with interest rates. So 3.8%, where it was trending towards, in the below 3% just a short while ago, it kind of raises worries. And even the core goods included in the PCE price index are now at 3.3%. So what that has done pretty much has destroyed the expectation of a rate cut in 2026. So the idea of higher for longer, seems to have extended now on to 2026 and probably beginning of 2027 as well. And obviously that affects a lot of businesses because it means that the cost of doing business is higher. Now, on the other side, inflation is also used to curb spending. I mean, to stop people from spending too much because obviously they have to. If the interest rates are high, they have to pay more to service their debts. Now, in this case, though, will that have an effect if interest rates are kept artificially higher, you know, because it is not an inflation that is due to kind of a market reasons, the way that the market function, but simply to the elevated cost of oil that has followed the closure of the Strait of Hormuz. So what that has meant then this kind of a cascade of effects has meant that like a flight from what is seen as so-called risk assets. And we know that cryptocurrency is seen, in general compared to the other investments that are available, um, is seen as a riskier proposition. So on one side, we see that, and we see kind of like this climb that Bitcoin has had from beginning of April, from the low 60s, mid 60s to the early 80s has now been interrupted, and we can see that there was like excitement when it looked like that the conflict was coming to an end, and now uncertainty has crept back in, and the prices are now again rebalancing with the concept of risk that people perceive. Okay, and this has mainly been down due to money actually leaving the crypto ETFs. So we've seen an institutional flight, excuse me, from the crypto ETFs, and you can see now it's now 1, 2, 3, 4, 5, 6, 7, 8, 9 days of straight outflows from crypto ETFs. So we can, if we top it up, we can see now it's kind of well over 2 billion have left just the Bitcoin ETF. Now there is also a difference between excuse me. There is a difference between what Bitcoin does and what the rest of crypto does as well. So we'll need to have a look at that as well. But before going a little bit more into it, let's see in terms of other economic news, it was a fairly light week. But the one thing for you guys in Australia and New Zealand, to remark is that inflation is still going up in Australia. So we're still now, sorry, it's not going up in terms of like from month to month, but it is like a very elevated level of 4.2%, which is worrying, even following the increases of interest rates that you've seen lately. Also, this was on Wednesday, and also New Zealand kept the official bank rate at 2.25%. So it's pretty much like almost like half the interest rates that we have in Australia, which is quite unusual because the Australia and the New Zealand economies are very correlated, and generally they follow each other a lot more closely than that. So these are the kind of the main announcements of the week. The inflation figures in the US and again Australia and New Zealand, what we just discussed. In terms of jobs in the US, again, there were released job figures every Thursday. Where are we? So we're still hovering around the same levels. So it's kind of over 200,000 new initial jobless claim. The total continuing jobless claim is still just short of 1.10 million. Which has been the level where it's hovered, over ever since I can remember, the last couple of years or so. There's been between 1.8 and 2 million roughly. So nothing new from that point of view. So obviously just remember that the Fed has the double mandate. One is to keep the economy working well and price with inflation, control inflation to below 2.5%, and at the same time keep the job market functioning properly, and at a healthy level. So while that is not moving, then the inflation is what takes the precedence at the moment. Okay, so the inflation going up, it's a worry for decisions that had to be taken. Now we've seen now the new Fed chair being sworn in. So there is one good thing and one bad things about him where it relates to crypto. The good thing is that he's been, is somebody that for the last 10 years has talked about, Bitcoin being digital gold. So we go from, the SEC and the Fed talking down crypto to now having somebody that's always supported crypto at the head of it. On the other side, what is negative is that is seen as hawkish. So it's kind of like although President Trump wanted somebody to head the Fed that will lower interest rates. This is not, what we know about the new Kevin Walsh, the new Fed chair, with his attitude to interest rates in the past, is one that has always been quite hard and kind of almost like forcing interest rates to be higher rather than lower. And that it's a worry again for for cryptocurrencies. They're very susceptible to interest rate changes. Now, on one side we got Bitcoin, and we'll analyze Bitcoin and see where we are in a second as a part of the cycle. On the other side, we got the rest of the crypto world. And that could be maybe exemplified by Ethereum. So we see the difference. Bitcoin during this cycle has created a new, very strong all-time high from 70 to 126, where Ethereum just basically dipped its toe very, very briefly in mid 2025, just above the previous cycle high, that is then dropped more than 50% back to the 2000 level. That's seen as a psychological level. So it'd be interesting if it manages to close the week above the 2000 mark. At the moment, we're just there. Yeah, 2007. And that would be like again a psychological level. So if the 2000 break, then there is like further fear that climbs into the market compared to optimism. Now, and the thing to be noticing, if we look at Ethereum, sorry, BTC, ETH. Where are we? There. So if we look at let me just remove all the drawings. If we look now at this is the chart of the relationship between Ethereum and Bitcoin. Okay, so we see where it was in 2022. So the 2021 at the height when Bitcoin made its new high, and then they made another one in around November. So the level of the value of Ethereum in Bitcoin terms was 0.08, and now we are at 0.027. So it's like a third, pretty much, of what it was in 2021. Now, where were we at the beginning of the bull market, which was roughly towards the end of 2020? We are pretty much where we are now. Okay, so this is the April is when the the halving event happened, 2020. Sorry, we're talking about 2018, 2022, 2026. Sorry, it's 2018, but 2022 sorry, 2020 in October roughly is when we started climbing in this, what was the bull market in 2020. Okay. So this, especially the first very sharp move, very quickly in from let's say December 2020 to May 2021, took us from Bitcoin's levels. Go and have a look. They were like below 10,000 to 64,000, and then it touched the high in November. But it's interesting to see where we were at the beginning of that process, that we pretty much are where we are now in terms of value of. So in during this time, if you had some money, let's say some cash in 2020, and you were thinking, oh, shall I buy Ethereum? Shall I buy Bitcoin? And the thing is that 5 years later, it wouldn't have made any difference. At least if you kept the tokens in in a computer, you hadn't touched and you hadn't moved them. It probably would have made a little bit of difference if you staked the Ethereum, because you would have received a little bit, like 3% or something a year for staking your Ethereum, where the Bitcoin would have still been, there are no staking rewards in Bitcoin. But pretty much we are at the same level. So the difference is that over the past few years, Bitcoin has gained a reputation, as digital gold, and so a store of value, where Ethereum and the other cryptocurrencies are pretty much linked to utility and usage. Okay, and the reason why we don't have like a bigger increase in this ratio, and so and Ethereum and the other altcoins are lingering behind, is because we haven't really moved yet into the phase of crypto where these products are being used, every day by a large number of people. Still, we are way ahead of where we were 4 or 5 years ago in terms of development, and the crypto products are a lot more evolved than they were 4 or 5 years ago. But the masses haven't materialized yet as users. And there were talks in the last cycles as the NFTs was going to bring kind of the masses to crypto, but no single use case at the moment has actually brought the hundreds of millions of people in one go to cryptocurrency. So we've been talking about NFTs. There was talks about crypto gaming, and all the major gaming companies have like a crypto section now. There's developing, they are actually building crypto into their games as well. But again, we still haven't seen that shift, that push that will make a difference like it did, for example, in 2017, where Ethereum basically appreciated about 15 times compared to Bitcoin, again, in a matter of months. Or even like in 2021, again, we went to 3 to 8, again, in a matter of 4 or 5 months. So, and where this is a time where they were both growing, both Ethereum and Bitcoin were growing, but Ethereum were growing a lot faster. So just remember that the difference in use cases is that, so where Ethereum was like 5 years ago, it still is now. Okay, so we haven't really demonstrated the case in numbers. There is in development, but in numbers, we haven't still convinced the public that cryptocurrencies, apart from Bitcoin, are something that they should be, using, buying, exchanging in big numbers. It's still a very niche product. Now, in terms of prices, the good thing when I say actually it's been a little bit of a bloodbath, I mean it's kind of been a minor one, but it's still at a time where things were looking up. Now there's been quite a serious correction again from 82 to 73. We're talking about over 10%, 10% from this recent top to where we are now. It's about 11%. So quite a serious correction. Now, the one thing I wanted to draw your attention to is that look at this correction, okay, which has been, I mean, the way you look at it is there's no panic in that. It's kind of like slow grinding. The price is grinding lowest little bit at a time, but there is no velocity. There is no strength in that move. Nothing like this. And nothing like this. So you can see this. This is the impulses. When there is a strong trend, you can see there have been 3 very strong impulses here, and you can see how vertical they are. It means it's moving really fast, in a very short period of time. Okay, so this is like a movement with a lot of momentum behind it. This is like being like yeah, what we're gonna do, we're gonna go up, we're gonna go down, and just like grinding a little bit. It means that there isn't any force or momentum behind the selling pressure at the moment for Bitcoin. And Bitcoin being obviously the head of the whole crypto movement. But if we look now at the past cycles, okay, so so you just pretty much I'll just do a rough draw of the cycles here. In kind of I'm talking about the 4-year cycles. Let's change the color. Okay, and then this is the current cycle started in April of 2024, and that will go until pretty much April 2028. Oh, the chart doesn't get that far. Never mind. Okay. Now, one thing that it's obvious by looking at this and is by examining the previous, the previous top of the previous cycle. So is that the price after during the first year of the after the halving event establishes a new high, and then it goes and retraces back all the way up to the top of the previous cycle within a certain range of it. So in this case, if let's measure this range, because these things tend to repeat themselves. So let me just go into the weekly charts because it's easier to draw. Sorry, put it around. Wrong way. So that was a 21% from the top. Okay, where we actually found the bottom in 2022, 2 years later. And in this case, it's been like 18%. Okay, so the drop between the oh, what am I doing? Sorry. There's been a 13% drop from the 2021 top, which was the top of the previous cycle. I have okay, the top of the previous cycle. So what can we expect now going forward? And just we see in roughly how long it takes for the bottom to be established, which is generally kind of like in year 3 of the halving. Okay, which is what we're in now. During the previous one, 2022, we reached the bottom in kind of in November, and within a certain range of the previous top. Okay, so this is actually wrong here. So we might have already touched that, or and we very briefly we actually touched a maximum of 29% down very shortly after the halving. I'm looking at this in terms of the bottom of the cycle, So we can see we're losing. It looks like the move down is actually losing momentum, while at the same time we have approaching the time where historically the previous cycles are bottomed out. Like we can see here in October 2022, we can see here in December 2018. So almost like again the 4-year cycle repeats itself, so it's where the owners of Bitcoin, which generally speaking in the past have been the miners, have sold all the Bitcoin and they had to sell, to finance themselves. And then once there was no more kind of a selling pressure on the market, prices started recovering again. So it seems that we going towards the same kind of the same pattern is repeating again. Where we touched, it's about 60,000 is where we, could already be the bottom of this market. We could be a little bit lower. I think we could potentially go back to about 55 maybe, around that figure before the market starts turning again. But the thing is that, so the idea is that where do we go from now? And with a lot of people are thinking, oh my God, I'm panicking, I should sell my Bitcoin. I would say no for a variety of reasons, not just for Bitcoin, but for the rest of the crypto coins as well, because utility is coming. And in terms of, usage of Bitcoin has become now an investment asset. And as soon as a little bit of excitement and safety comes back to the market, this will, go back into the traditional price range. If we use, let's say, sorry, I'm just doing an extension.
Look, a question for you.
Yeah,
If
carry
it
on.
becomes more utility, were you expecting probably some of this fluctuation to streamline a little bit? Because then it becomes kind of like an everyday usage versus kind of like, I don't know if you want to say speculation or investment.
Yes, no, exactly
Other
that.
than like, if it's like your normal dollar or pound or whatever, if it's been used like that, it would probably it's got to streamline into a much more narrow value.
It will be. We already see that in Bitcoin terms. That's already happening. It's just that it's still so tiny compared to, the funds are being used every day. Everything else are used in, investment stocks and shares and derivatives. That it's still elevated compared to anything else. But once it gets to that sort of market size, then yes, it will be. We're already seeing that happening, but it's still very volatile compared to anything else. So this is kind of like the move that we expected and how we can project. As you can see, there's just simply the same move that we're seeing, would take us to 170,000 from the previous from the actual from the low that we reached. And these are generally the most significant mathematical levels. The one-to-one extension, it would take us to 171, but the golden ratio would be at 240,000 for the next move. Okay, so I can see that, it's not on this level or around 200 to 250 is what, there are varieties of mathematical models that take us to that point, but also it's starting to get like a conviction because everybody is talking about that level. So eventually when when we get into eventually we get into price discovery again, which, could happen within, 8-9 months from now, then everybody would be asking themselves, okay, what now? What's the next target? You can see how quickly it moves from, 50 to 110, from 75 to 125. So it wouldn't be unusual for, to go from, again, 60 to 170. It's not, don't think it's a crazy move. It's entirely possible. And if you look at the previous, we superimpose this. So we can see that we have the previous move from 2020 to 2021, and then when it just projects exactly stopped pretty much at the golden ratio. Okay, so for that move, the golden ratio was 123.5. So we actually exceeded that by a couple of thousand. David, you have that question?
Yeah, just in terms of timeline, mate, 17, 21, 25, are you in your mind thinking that this will be 2030 that we hit this target that you're talking about, or do you think we'll get there quicker than that this time around?
No, because I am looking for the I was really what really stopped everything was been the Iran war, because I think we were well on the way, to get the next move. I personally would expect it in 2027.
Because historically there's been the requirement of a little bit more reaccumulation to build up and that, sort of base before it kicked off. But if
Yeah,
what you're saying is correct, we're just doing more of a drop and then a rally, so to speak, in terms of time.
Yeah, because it's like when it starts growing again, so it's generally kind of there is 1 year of excitement. So that was in 2024. Okay, so the 3 years, the 5 years you're thinking about are you looking at the kind of Bitcoin halving cycles? So before, when the halving cycle, the previous one was 2020, and the market topped up like a year and a half later. The second one, 2024, and the market again topped up at this stage like a year and a half later. So, but when did it start growing again? So this is what we want to see. So if you can see it, so the market went up and then came back again, pretty much after 2 years, then it started growing again. So we are in that window now. So the halving was in April 2024. So we now, May 2026. And in the past, it started to be growing again around September, October. This is when you started getting noises again. So we might still drop a little bit further from here, but we are pretty much, getting at the price and time where in the past markets have turned around. Okay, so this is what I'm saying, and then we, nobody has a crystal ball to know exactly, and it's not like time repeat itself, exactly to the day or to the minute, but we can only observe what we've seen, and try to see what we can expect for the future. So in this case, it is like, this is like Fibonacci numbers, and there are some, you can look at the golden ratio in nature, which describes a lot of things. So it's a number, it's a ratio that is used a lot, even to determine future price discoveries. And it's uncanny to see how here from where are we? From the bottom, where are we? Let me just start again. It's just let me just remove all of these. Remove all of these drawings. Come on. So we can see here from the move, so extending the move that we saw from 2018 to 2021, from the bottom to the top, you can see that the market in 2025 with the next move topped up at exactly the golden ratio. Okay, so if we now remove that and we'll do it again from the next from the next move. And again, we don't know if we hit the bottom yet. That's the big question. But if we were to extend the same with the same ratio, we will hit the 240,000, which is pretty much, you know, in line with the expectations I had, you know, when I approached this in 2024. Okay, and it seems crazy, but that's I'm still waiting for price to get to those levels, and I'm not worried about, you know, exactly if it's going to happen, you know, 2 or 3 months later, or 6 months earlier, 6 months later. But I think that's the next stop. The same way that 120 to 125 was the previous stop for the current, you know, the current high that we've had. So there's still a lot of, for me, a lot of positives that we're taking from that. Although there has been a lot of headwind against crypto that I really wasn't expecting to be that strong in this cycle. But mainly has been not so much the, you know, conspiracy theories or anything else. It's more like, obviously there is a little bit of that in sense that there are forces that want to delay this process because they lose power. But what it's undeniable is that the mass use case is not there yet. So what are people using crypto for at the moment? Here, there is, yes, it's taken a big chunk of the market in, you know, cross-border transactions, and that's, you know, that's obvious. But apart from that, you know, I don't know, you could mention 10 use cases that everybody say, oh yes, I use crypto for this. It's still a very niche. It's still a very niche product at the moment that that people are starting to feel a little bit more confident with. So this is where it is, where we are at the moment. We can see now that, you know, now the balance of inflows and outflows is pretty much equal now, where obviously the last few days have been kind of red for the last couple of weeks. And I don't know what's going to happen today, but we have you know, there isn't too much excitement at the moment. If we manage to kind of break through, you know, into well above 74s, we might trigger a little bit of short coverings, especially here about, you know, about 74.5, 75, because I think there might be quite a bit of stops beyond that. We can look at the heat map. So let's have a look first of all at the fear and greed index, which is interesting. Again, we're still in fear and going towards extreme fear. And although this is, you know, it can be worrying if you got a lot of crypto right now, at the same time, this is where your buying opportunities are, where generational wealth can be created. So when everybody is fearful, you know, you buy. When everybody is greedy, you sell. And that was, let's have a look at the heat map to see where. So wait. So you can see here clearly there is some there isn't a lot actually of liquidation happening until we get to almost 76,000. That's the barrier That's the barrier, I think, the line in the sand, the shorts have at the moment. And there isn't that much on the other side. Let's go on a little bit of shorter time frames. I mean, really, we're talking about just the bottom of the current move, but nothing major in terms of, you can see the yellow areas is where there's more liquidity, the more liquidation leverage. But there isn't as much leverage that's come into the system as well on the long side. So look at the 24 hours. On the very short frames, we're talking about 72 to being the short time framework line in the sand, beyond which there would be some about 50 million worth of liquidations that could push the price down then below 70,000. Okay. So that was pretty much it for today, because it's been a day dominated by macro rather than crypto news. The one bit of news that's worth mentioning is that Paxos, which is one of the native crypto providers, they're connected to PayPal, it's now been approved to process purchases and sales of stocks and shares on the blockchain. So this is one of the, so do you see the payment rail? The rails now are starting to get put into place. So I think without too much, we start seeing first the trickle, and there are more significant volume of securities exchanging hands on the blockchain. Okay, and that could really be, when we're talking about massive use cases, that could represent that, because it would mean moving from a like a very limited market where you trade 5 days a week for only a limited number of hours, to pretty much a 24/7 market, the same as it is for Bitcoin. Imagine for any stocks and shares and other securities as well. So all these things again are little things that go almost like unseen, because they kind of build in the stack, one brick at a time, but to get institutions involved, you need to have all these things in place. And then we'll see what the winner is. Another tiny bit of news. So we're talking about how decentralization is important for crypto, and is one of the building blocks of any blockchain. So there was another example this week of one of the kind of success stories of the past 2 or 3 years, like the Sui blockchain has actually stopped for a couple of hours, and they had another outing a few months ago. They were stopped for 6 hours. So that should raise some warning bells, because if there is a switch, where things can stop working for 2 hours, 6 hours, or any length of time, is it truly decentralized? Especially when these things keep happening, month after month, at least several times in a year. And if you are planning to build something serious on a blockchain, could you afford to have that risk where things stop working? Just imagine, for example, if you were in a position like MasterCard or Visa, and you have an outing for 6 hours, 8 hours, where nobody in the world could use their card, that kind of card. Imagine what kind of a mayhem that would cause. So it's not a small thing. It's a small thing because nobody uses these things yet. At least just some crypto apps. They are not relevant. They're not running anything that's essential. But the moment that we are moving real life items onto the blockchain, this cannot happen. Yeah. And this is where we say the kind of like much slower projects. So I know we keep talking about, Cardano, but Cardano has never had an outing. It's never stopped working until it was launched, And so why there is a reason to the madness. Thinking, why is it so slow? Why is it took so long to get smart contracts? Because they're doing things properly. That's why, you know. Otherwise, you do things like other chains do, and then just, deal with the consequences later.
Yeah, it does make
Okay.
me think.
Yeah,
Does
go
make
on.
does make me think that we have all these blockchains out there, and all of them performing at different levels for different lengths of time. If we are truly going to replace the current fiat settlement layers, it's probably going to take all of them, like, to really do it. So, the more we have backup channels for transactions to flow through to, the better. So, the bulk of it may be handled by Solana, Sui, but then there's the largest and the most critical that maybe get handled by the more stable blockchains like Cardano. I was watching a demo last night from midnight where they were showing Ethereum to Cardano transactions happening seamlessly through the midnight. I guess it's still a bridge, but that's the sort of approach I think it probably all needs, is that we just have the ability to send it into and again, these sort of corporate or retail transactions where people are buying stuff in shops. We don't want all that information to the general public. It should probably just stay private to the individual. And so if that's going through a privacy layer that has got this, massive connectivity, interoperability with other blockchains, then that becomes the place to send your retail transactions and your big institutional transactions, rather than just picking your blockchain and hoping it stays up. It's like we need a multi-headed approach to really, and I think that's what crypto should be aiming for, is let's replace the whole system rather than let's just try and win amongst ourselves.
No, definitely. I mean, it would be good if we could have, different blockchain that concentrate on different services, so to speak. So because something like Midnight, for example, can solve that privacy problem for all the other chains that connect to it. So if somebody else has, another unique selling point that they can work with it better than any other blockchain, then they can use a similar connection to then have that utility for other blockchains as well. So that is how we kind of like we win and we attract the masses, because people don't really care. So apart from, we're in the crypto world, so we've been in there for, there have been supporters of Cardano, supporters of Ethereum, XRP, and so on. They all fight with each other, but nobody else cares in the real world. In the real world, they think, well, I got my phone, I want to, send money to Johnny, and I don't want to use Western Union because they charge me 20%. I want to use this app that I've just downloaded that only charges me like about 3 cents to send 10 grand or something like this. And this is what people care about, and I can do it in 2 minutes. I tap here, tap there, and it's done.
Yeah.
So
Yeah.
all the rest is just like we squabbling between ourselves, really thinking my idea is better than yours, but really it's not really relevant. It's like the same as, when you go in a public coffee shop and you connect to their Wi-Fi, do you care what make the router is? You just connect that you can get good, just care that you get a good connection, and you can use your phone, to access the internet. Nothing else. And it should be the same thing for crypto. You don't really care what, because I mean, we know that we all will access crypto through our phone mainly going forward. So the only care that you can do the things that you want to do.
Yeah.
You know,
Yeah.
how it happens, well, let's get together and agree a way that makes everybody a winner, all right? And just like, yeah,
One,
yeah,
one thing so we were traveling north the weekend, and we had to go through the M6 toll because it was the only sensible solution. So I said, yeah, okay, I'm going to pay my extra money just to drive on a road in the UK, which seems to irk every Britishman. And I didn't have my credit card, my old plastic credit card to hand, so I was paying with my phone, and the experience of that is so painful compared to just flashing your plastic card at it, because you have to hold your phone up and then it finds the NFC chip, and then you have to make sure you select the right card, and then you have to press your thumb to do the biometric readout, and it's a couple of toing and froing. I was like, yeah, that's quite a significant barrier, especially when you've got like toll booths, high volume traffic going through it on a bank holiday weekend. It's it's a lot to ask of a system, and yet we're added in a technological layer where you have your forensic, proving I've got my thumbprint, I can still pay for this. So that's a barrier that we've accepted as society now, because like everyone younger than me seems to use their phone for every transaction. So we are willing to downgrade the experience to improve I don't know, what's the improvement from using a phone over a credit card? Just one device, it's so crypto adoption is gonna slow things down, but it isn't going to stop that adoption. It's a compromise. A user interface compromise we are willing to make to a certain level, as long as we get to that level where it's okay. It's only a factor. It's only 20% slower than before. That'd be fine. 50% slower. Yeah, that's okay. Twice as slow, we might start to moan a bit.
yeah.
We'll
It's
see.
just, on one side you got to convince why is it a good thing for the user. So is that we bring in that extra use case? I think, well, it is good because your privacy and things. So you get people thinking, well, I want to use it because of that. Then everything else you can get used to. If it takes a little bit longer, but I think first of all we got to get to that point where I think, why should I use this thing? And it's
Yeah.
obviously the case for transfers is obvious. It costs a lot less. It happens in seconds rather than days, and so on. But everything else is still got to. There is a lot of work that needs to be done on everything else.
Yeah.
Right? Yeah.
And it's only so long that the sort of top up benefits or yield benefits will cut it, because everybody else can offer those as well, just using existing payment rails. So yeah, we'll see. Yeah.
So yeah, to be continued. Hopefully, let's see what happens. Hopefully, we get some good news from Iran that can make everybody a little bit more relaxed and a bit more ready to invest their money and just remove a little bit of the fear from the whole process. And we'll see. So every week that goes past is like a week that we move towards like an inflection point where everybody's looking at the 4-year cycle. Okay, so as we get close to October, just it removes another obstacle because everybody thinks, well, 4-year cycle until October still drops, etc., etc. So there is still, whether you believe it or not, some people do. So there is some like friction, and that is removed as well. So I'll be kind of very happy because any good move it's going to be seen. Oh, you see, I told you that we're going to start growing again in October. So there's kind of like it's going to be a lot less friction and a lot more easy movement. So let's carry on. Let's carry on watching and observing what happens, and then hopefully we can all make the right decision at the right time. Okay, so guys, I will wish you all a wonderful weekend. Jonathan, we'll catch up on Sunday.
Yeah.
Yeah.
Yeah. Yeah. Sounds
And
good.
enjoy all the bank holiday weekend if you are in the UK. If you are somewhere else, just enjoy the weekend. And if you have a holiday, good. If you don't have a holiday, still go Saturday and Sunday. So enjoy that.